Okay, hopefully everyone can hear me. Please raise your hand or put something in the chat if you can't. So welcome to the first MPA webinar for quite a while. We know you're all feeling a little exhausted from living and learning virtually, so in return for you logging on, we promise to try and keep this really snappy and interesting for you. We've got between 45 minutes and an hour, some time for Q&A at the end, so submit any of those in the chat box and I'll be able to see them. I'll be here online monitoring the chat. If you have any issues or questions, I'm here to pick them up. I'm Lorraine. Now over to my colleague Sam to introduce the day. Sam, I'm going to make you present, Sam.
Thanks, Lorraine. This is the bit I always hate. Taking control.
There we go.
Right. Hopefully, can you see my screen, Lorraine?
We can, yep.
Excellent. Thank you. Thank you. Thanks to Lorraine. Let me introduce Lorraine. Lorraine is part of the marketing team who've been people working behind getting this done and out to you, and Lorraine is responsible for making sure that we've all turned up on time and that it works. Lorraine will also be popping in and out of the webinar as we go along with some bits along the way. So thank you, Lorraine. I'm Samantha Wildman. I'm Head of Business Development here at MPA, and I'll be your host for the next hour. So to introduce myself, I've been here at MPA now for nearly 9 years, supporting businesses primarily along their journey of innovation, so helping them some of their funding, things like R&D tax credits, patent box, grants. So many of the clients on board here would have hopefully spoke to some of you along the way and looked at how we can support you and then pass you over to our experts. And today I'm very fortunate to be joined by two of our experts at MPA, Joe Surley, who's the head of tax and accounts, and Mike Price, the owner and founder of MPA. So Joe, please introduce yourself.
Thank you, Sam. So I'm Joe. I've joined MPA last year at the height of COVID, so I've been here just over a year. I head the tax and accountancy team here at MPA. I was just saying to Sam and Mike and Lorraine earlier that I realised yesterday that I've actually been involved in tax for 30 years. So that's just suddenly made me feel very old. And my specialism is sort of advising owner managers, directors on their tax and business affairs. So helping them to navigate that minefield that's forever changing for them. In terms of owner managers, obviously, as well, linking that to their personal affairs because the two are intrinsically linked and affect each other. So most of my career has been spent at RSM and Grant Thornton. Some of you may know those firms, and then obviously here at MPA since last May. So thank you.
Excellent. And Mike?
Yeah, thanks, Joe. So Mike Price. I started MPA 15 years ago really to fill a gap. I watched my mum running an engineering company and really struggling to find the right advice at the right time. So for me, kind of two passions really. One is to help business and the other is to really get it properly invested in technology. So I've been really fortunate in my career to have been exposed to some very high quality coaching and mentoring. And that's continued over the last 15 years while at MPA. And really my mission now is to help business owners have better businesses by passing that coaching and mentoring on. So I spend my time talking to business owners, finding out where it hurts for them specifically, and then finding a solution to their problem.
Excellent, thank you, Mike. So without further ado, shall we move on? So for those of you who don't really know MPA that well, we're a professional services company and we specialise in working with SMEs and innovative businesses. We're very well known for our work on R&D tax credits. We're a specialist in that area. As you can hear from both Mike and Joe, there's a lot more to MPA than just doing the R&D. Today we're going to run through a few areas. We're going to start at going through the key tax and account changes that we were expecting to see come through in the next few months and what that means to you. We'll look at the types of funding available to innovative SMEs like yourself. And then we're going to give you some tips to help you evaluate your performance over the last 12 months in order to achieve your goals, whether they're to do with stabilising, growing, or even selling your business. First of all, to put a bit of this into context for you, we're not going to spend a lot of time going over what's happened in the last 18 months. We're all fully aware of the pressures that that's put on businesses. Now things are opening up. We have spent some time in the EU exit transition. We really want to know how you feel. A couple of months ago, we polled our clients to ask them about their biggest challenges. And as you can see from the graph here, the main one was attracting new customers was the biggest challenge that our clients were facing, very closely followed by managing cash flow, retaining their existing clients, and how they could drive innovation forward and being able to invest in R&D. We're really interested to know how that resonates with you. So I'm going to pass over to Lorraine and she's going to put a poll up for you.
Yep, so you should see that on your screen now. So yeah, which one of these do you think will be your biggest challenge? You know, we do have some existing clients on the call with us today, but there are some of you that we've never met before. So really interested to know what your thoughts are. If you can start filling that in now, that would be super. Hopefully these are all things that we can help you a little bit with, either today or through some of the great content on our website, your access to our professionals. Yeah, it looks the same, guys. Like most people saying, attracting and retaining customers, the biggest issue for them over the next 12 months, followed by cash flow or access to funding. So we've certainly got a lot for you guys that are having cash flow or funding challenges coming up in the session today. So yeah, back to you, Sam. Interesting results.
Thank you, Lorraine. So if anybody wants to ask any questions or write their thoughts through or give us any updates on what we're talking about, you'll see that you have a chat icon. So please do leave your comments and your questions there. Lorraine is monitoring that and we'll take 10 to 15 minutes at the end to go through those questions for you. And if any of them are quite specific, we'll be able to come back to you directly individually on those. Right, so first up, Joe's going to give you a bit of a rundown on all the things we know are set to challenge businesses over the next few months and coming years. So over to you, Joe.
Thank you. Well, just firstly, just like to say, it certainly seems from obviously our poll and what we're hearing generally is that businesses are spinning a lot of plates at the moment, and I think that's just to keep the business as usual going. Obviously, to top this off, unfortunately, coronavirus has actually only delayed what the government and HMRC had planned. So over the next few years, what we expect to see is a fair amount of reform, in particular in the world of tax and accounting. So some of these changes are on your screen now. Unfortunately, as tax and accounting is forever changing, putting on all the potential things would just be too much. So we've put some key things on there for you. So, for example, making tax digital. That's a critical one at the moment, particularly VAT. Due to be introduced for all businesses from April 2022. So if you're not already thinking about that, then you should be. Even if you registered voluntarily last year, if you came because it was delayed last year, the implementation, then you will still need to go and formally register again and make sure your details are up to correct before April 2022. There's also the social care levy that was recently announced, a 1.25% social care levy. Again, businesses need to start thinking about this, look at their cash flow, make sure you've got it in your forecasts. The big thing on this is that it'll be payable by everybody. So even if you've got staff that don't currently pay national insurance, they will pay this 1.25% social care levy. So you just need to be aware of it and make sure you factored it into your numbers. And again, of course, as announced in the budget, the corporation tax rates are due to increase. So for businesses up to £50,000 profit, it will remain at 19%, but then it will go up. There'll be a marginal rate for businesses then up to 250,000, and then after that, the rate will be 25%, and that's due to come in 2023. Now, whilst that may seem a bit of time away, as we all know, time flies, and therefore, again, you should be looking at your cash flow and your forecasting and your business plans to make sure that you've incorporated these changes. Just in terms of the corporation tax rate, whilst it is increasing to 25%, this still will be the lowest rate in the G7. So there is scope there for in the future, potentially, if we're going to look to align with other countries, that it might go up again. And I certainly know I was on a Treasury Committee sort of discussion before the budget, and there was certainly talk there that they could push it higher if they needed to in the future. So that one's probably a watch this space, but that I think we're talking quite some time away before they would do that. So given all these challenges, it is probably more important than ever that actually businesses make the time to plan, review your cash flow, review your business plans, your strategy, just to make sure that you have included all these things. They come around before we realize it, and then although it may seem a small amount, so for example the levy, when you start actually putting it into your numbers, it can soon add up and have an impact. So therefore, we just need to start planning for that. Mike, you speak to an array of clients from different sectors and sizes, and as a business owner yourself, do any of these issues particularly stand out to you as the ones to watch?
Yeah, they do. Thanks, Jo. I'm gonna pick one off the page, and I'm going to introduce another one because that's the way I normally work, as you know. To the top right-hand corner, I think it is, capital gains tax reform. We put there unknown because it is unknown. So the Chancellor basically scared some revenue into the exchequer at the last budget by basically saying that they're going to harmonise capital gains tax rates, so when you sell your business, with income tax rates. Now that would take the value of your business when you sell it, your tax rate would be 10 or maybe 18% under capital gains, would actually take it to 45% under income tax. So it's a massive, massive change, very, very punitive. So if you are genuinely thinking of selling your business, or it's something in your very near future, then you should be thinking about that now, certainly before the next budget, because to not to do that could massively change the amount of money that you actually see in your hands. And then one that's kind of not on there, is a big thing, I get this asked of me a lot, and we see this pressure in our business too, quite frankly. There's about 1.5 million people unemployed at the moment, and there's about 1 million vacancies at the moment, and those two things don't align. So there's a mismatch in skills, and as technology increases, that gap is only going to get worse. So what this is doing is putting upward pressure on wage rates, and it's meaning that there's more churn in the market. So really the key message for me is, what are you doing about it? So, purpose. So businesses should have a well-defined purpose that people can align to. And the purpose shouldn't just be, well, make me as a business owner as much money as you possibly can, please, because that's not compelling. So it needs to be a compelling purpose that everybody can get behind. And the other thing that we're doing as a business, and we're helping a lot of other businesses do, is transition from 1 or 2 key shareholders to employee ownership. You only have to look at the difference in experience from Tesco's Express to Waitrose. I mean, it's clear that Waitrose staff are completely and utterly wedded to that business in what they do, how they engage with you as a customer. So moving your business to some form of employee ownership, I think, is the right answer to attract, retain your key staff and keep all of your team motivated to work for your clients. Okay.
Yeah, and it's definitely something that we've seen. We're getting more and more inquiries about, isn't it? And we're doing more and more work in that area. People are definitely wanting to look for ways to incentivize and engage their staff in the business, give them that motivation to help it grow and be there for the future development of it. It's certainly a growing trend. Would you agree?
It is for sure. So it has to be the right answer, I think, for the majority of businesses to have some form of employee ownership. Yeah, we're seeing, well, we've got nearly 1,000 clients. I don't know how many we're seeing wanting to have this discussion, but it's almost at the point where we're struggling to actually keep up with the number of people wanting to have the discussion. So that may well be the next webinar for us, because it's clearly a hot topic right now.
Yeah, and can I just ask you another question, Mike? Sorry, but I didn't mention it earlier, but on top of, and I don't think it's on my slides, but on, oh yes it is, a rise in dividend rate. So at the same time as announcing the social care levy, there was also an announcement of an increase in dividend rates by 1.25% as well. So effectively catching, you know, those owner managers, shareholders that are being those owner managers being remunerated by dividends. Um, do you think, as a business owner, that will have an impact on your remuneration strategy and how business owners remunerate themselves going forward?
Yeah, I think it has to. It's a little naive, I think, from government, the exchequer. Now, if you think there's 5 and a bit million of the 5.5 million corporations in the UK are SMEs, to start penalising them, and it is a penalty, because over the last few budgets we have seen the dividend rates come up. So, you know, a lower band was introduced, there was a higher rate put on it, there's another rate change again. So they are pushing dividends much more towards income tax rates. So at some point you have to say, why would you bother starting your own business? Why would you invest time, effort, energy, worry, your life savings? Why would you have your house underpinning the business, which most business owners have to do? Why would you do that if you get no more reward than being an employee? I don't think you would. So if we're not careful, we are going to crush that entrepreneurial spirit by basically taxing people out of SMEs, and we'll all want jobs.
Jo, as you're good at asking Mike questions, I'll put one for you. I think one of the things we quite often talk to our clients about is the changes within IR35, and I know it's been around for a while, but what sort of things should people be doing or considering with IR35 going forward?
Yeah, so IR35 or off payroll working, as you say, they've been around for a number of years now, for quite a few years. I think obviously there were some changes announced. Get my years wrong. Last year, this year, recently. In terms of the next level, so I think it's this April, actually April. It was meant to be last year and it was delayed. But the things that people should be doing, if they haven't already, is actually checking the contracts and the arrangements they have with contractors, and those that may be working from them through a personal company, just to make sure that there are no issues there for them, because the onus is very much moving away from the individual to the company, and you don't want to find that you haven't actually done anything yet. Even if you think everything's okay, there's no harm in getting a second opinion and checking on these things and making sure that it's all set up. And HMRC, I say, it has been around for years, but HMRC are now starting to focus on this area more and raise more inquiries on this area. So they've had a few successes with people in very public, positions on the TV and stuff like that, where they've had success, and they will now start to move that to your bigger corporations, and they'll gradually move it down to others. So it is an area that everybody should have in the back of their mind if they haven't done anything already to actually at least get those contracts out and look at them.
Excellent, thank you both. Now, I know there's always a lot of changes going on, so if people here on the webinar listening in want to keep up to date, then please subscribe to our newsletter. The next version of that is going to be launched soon, and that's where we can keep you abreast of all the changes that are happening. Sorry, slide was a bit slow to move there. So, now, to be honest with you, there are lots of different funding options, and we can't cover them all in the time that we've got here. It's very complicated, and it's down to lots of people's what their requirements are. So, as MPA work primarily with innovative businesses, they're the ones that we've pulled out to look at today. If there's anything you want specifically, you know, if you're doing research and development, or if you've got a commercial viable idea and you want to know what financial support could be available for you, then please do get in contact afterwards. We can have a chat. This will just give you a bit of an overview of what's out there, and obviously stop you having to sort of trawl the internet to find the information. But before we start, I think Lorraine has another poll for you.
I do. So I would imagine a lot of you on the call today are actually really interested in this topic, certainly considering the last 12, 18 months that we've just gone through. So I'd really like to know how much you feel you have a good level of knowledge about these topics. So as Sam said, we work with innovation active businesses. So we've pulled out here R&D tax relief, grant funding, patent box and EIS. You'll see there's a lot more to the funding landscape, but those of you on the call, what bits do you feel you already know about? Start something that answers now. So interestingly, we've got a 50-50 split between R&D tax relief and grant funding. Not surprising. We have, you know, we're R&D tax relief experts. We've worked in that sector for a long time. So I'm not surprised that a lot of you have come into us through that route. We've also started to recently talk a bit more about grant funding. You can find a lot of stuff on our website about that. So really good to see that some of you already know a bit about those areas, and hopefully if there's some of our content around it. No one's saying that they know anything about patent box or EIS. So definitely some learnings coming up.
Excellent, thank you, Lorraine. So, Mike, today on this call, we've got a multitude of different businesses, and they'll be within, you know, different parts of their journey. So, I know you're going to give them a broad overview. Could you start on the funding options for us?
Yeah, of course. That's probably not on our script, so we'll be responding to that poll. But I can also do a quick bit on patent box if that would be useful. So let me start with grants. So really the grant landscape is, it's all connected to what the government call their grand challenge, which I'm guessing most of you have heard of. And it's the four pillars really: artificial intelligence, an aging population, clean growth and mobility. And you'll see that all of those things are interlinked. And a big push here is the decarbonisation agenda. So a bit clean growth of technology and also power is incredibly important. AI typically sucks up a lot of power, so those two are combined. You need AI to run a sensible mobility, a future mobility scheme, plus the you know, looking at the energy crunch that we're coming into with, you know, electric cars being promoted, but not having enough power on the grid to run everything. So we are coming at this from a, you know, a crunch point of view if we're not careful. So the point of this funding really is to take a groundbreaking idea, a clever idea, and then finding a way of anchoring it into one, or ideally more than one, of those four key things. The big stumbling point here is that you may well have a good idea, and it may well be a really good idea for your business, but UK PLC isn't really interested in your business. UK PLC is interested in UK PLC. So how can you create a change in our entire community through your business? So this is not about how we make your business better. This is how we made UK PLC better. The other thing, the real catches here with grants is it's typically matched funding. Unless your idea is so unbelievably groundbreaking and beneficial, you may get 70% of your expenditure granted, but typically it's 50-50. So if you ask for £1 million and you get £1 million, you need to put your £1 million up against it. And if you don't have £1 million, you can't get the grant. So you need to be able to demonstrate and show that you're spending that money. So grants on their own are great. They are absolutely not free money, but you have to be careful. They cover money retrospectively, so you have to spend it first. So you have to spend your money, your matched funding. You have to spend the grant money as well. And then once you've spent it, you get it back. So this can have, grants are a great thing, but they can have a massive detrimental impact on your cash flow unless you're very, very careful about how you monitor those things.
Excellent, thank you. Joe, I was going to ask you to pick up the next two areas, the tax efficiency and the tax reward incentives. And obviously Mike's just volunteered to add some extra around the patent box for you there.
Okay, I'll throw it over to you, Mike, when I'm ready. And I'll try not to go. I will go into a little bit about research and development tax credits, very brief, just for those on the webinar that might not be claiming it already and potentially could be. So obviously funding is key for all businesses, and that is wherever you are at in your life cycle. So it can be from, through investment from owners, from bank finance, from the grants that Mike's just mentioned, third-party investment, or indeed other funding. So that other funding is the likes of things like the R&D tax credits and the patent box tax relief claims that are available. So when considering these options, and there are a vast amount of them, it is important to understand what is available and how they interact with each other. So in terms of R&D, if you're doing something that's innovative in your industry, so you're advancing the technology, it's a new product that's not been there before, and you're not claiming R&D, then you should be thinking about it. It is known that up to 80% of businesses who would be eligible currently aren't claiming. So, have a think about that if you're not claiming already. For those of you that are, then great. Know that you are the ones that are in the lead, claiming that relief that is there, and it's a valuable relief to you. The same with patent box. If you have something that you're thinking about making a patent on, like patenting, then do consider the patent box relief. It can work side by side and hand in hand with R&D as well. So, don't think because you're claiming one, you can't claim the other. So we just need to think about all of these, and again with the grants, etc., they can, if done correctly, all interact with each other quite nicely. The key here is actually getting advice on it. So if you are thinking of doing something innovative, then do look at patent box relief, and that's a 10% relief on the amount that qualifies for the patent. R&D, if it's small SME companies, small SME scheme, if you qualify for that, then it's basically 33 pence for every pound of qualifying expenditure. And the key there is qualifying expenditure. Hence, you'd need to take specialist advice on this, because you may have done a lot of expenditure that you think relates to R&D, but actually, is it qualifying expenditure as a HMRC would interpret it to be? And that is the key in this. A good accountant will be happy to discuss this with you if you think you might qualify, so do take advice. The other key thing is if you're looking for third-party investment, might be through a venture capitalist, business angels. Depending on where you are in your life cycle, you might be able to obtain EIS, so Enterprise Investment Scheme status. It's one of the things I think just came up in the poll as key. Now, this is really an incentive aimed at the investor. So the investor gets some tax reliefs for actually investing in a company that has EIS status. So if your company's been trading 7 years or less, you potentially qualify under the EIS investment scheme status, but you do have to apply for that status, and there is qualifying criteria, but then that can make you more attractive to to outside investors. It has been shown from COVID, one of the outcomes of COVID is that investors, third-party investors, are now more willing to invest in high-risk companies. So companies that before they may not have thought of, now they're seeing that actually these innovative companies that are doing something totally different, it might be something to do with the environment or, mobility, like Mike said. Actually, they're now worth taking that investment, and they're putting more money in that area. So it is getting easier to get third-party investors to take that risk in the more innovative companies. So if you thought about it before and haven't been successful, it might be worth thinking about it again, to try and attract some of these investors to help you get the funding you need. The key for me, though, is that it's important to talk to your advisor, whether you're looking for a grant, an R&D claim, patent box. You just need to make sure you take advice on it, and take advice early, just so that you can make sure that you're doing the right thing for you at the right time. Mike, again, is there anything you'd like to add on this?
Yeah, thanks, Jo. I think it's just reinforcing that last point. The grants and reliefs available, tax reliefs for you and for investors, for instance, the reliefs available are very, very generous. But it's a pretty complicated landscape when viewed all together. And they don't often play very well together in one business. So grants and R&D, patent box, EMI, EIS, they have all these acronyms, they have the ability to actually attack each other and break value down in each of the schemes if they're not applied carefully. And the key thing here is once it's done, it's done, and it's almost impossible to unwind. So to give you an example, we had a client recently quite happy that they've got a £3,000 grant from Cranfield Institute of Technology, and it was something completely innocuous like stationery or buying new printers or something completely innocuous like that. They were really happy about that, told me about it, and then we told them that, really sorry, but you've now stripped out £150,000 worth of research and development credits in your business. So they got £3,000 but burnt 150,000. And you can't just say, really sorry, can I give the grant back? Because once the paperwork's in and done, it's in and done. And it's qualifying state aid, it's notified, and you're in the scheme. Unlucky. So really important, can't stress enough, get your advice first.
So in that, Mike, oh God, sorry.
I was going to say, do you want to have a quick 2 minutes on patent box?
Yeah, can I just ask a question first? So just to clarify for everybody, the issue in that case was the wording around the grant, wasn't it? How they applied for that funding. But if that's done correctly, hence the recommendation to get advice, you can actually have grant income and ring fence it so that it doesn't taint all of your research and development relief.
Yeah, absolutely. And so, and that's the point about the planning up front. There is absolutely a way to have grants, R&D tax credits, patent box, and all the various other tax efficient schemes in your business all together, all operating optimally. But it's not just a matter of going out there and getting them and hoping it fits. Because if you do that, I can almost guarantee you it won't, because of the way the legislation is written. So it just needs to be ever so carefully knitted together, and knitted together properly. Then yes, you can have all of these things in your business.
Brilliant. Thank you. Okay. Do you want to do patent box now, please?
Let's see where this goes. Patent box is it's a reasonably well-established relief now. It's been around for nearly 10 years. There are over 150,000 companies in the UK that have got patents, and less than 1,000 companies claim patent box, which is just crushingly disappointing that people are willingly paying more tax than they need to. I'm not quite sure why you would do that. So there's a huge void in terms of the publicity around patent box. So that's the first thing. Hundreds of thousands of companies could claim, less than 1,000 do. That less than 1,000 claims, I think, was just over £2 billion. So the big boys are getting in on this. So the Glaxos, Microsofts, Googles of this world are getting in on this and taking all the money. So I think there was something like 100 SMEs. That was it, that claimed patent box. So, if you can get this tax relief, you're basically taking your corporation tax down from 19, soon to be 25, down to 10%. So you're halving a corporation tax. Who wouldn't want to halve their corporation tax bill? So if you don't have a patent, don't think straight away, this doesn't apply to me, because it's not that difficult to get a patent. As long as you're a patent attorney, and we work with a few that we've spent some time educating, doesn't start out with, right, I'm going to stop anybody anywhere on the face of the planet doing anything like your product. When they start there, and then it takes months and months and months to write it, it then can take 5, 10, 15 years to prosecute it to get your patent live, probably £50,000 to £100,000 of the cost. Clearly, nobody's going to do that. We start at the other end and we say, what's the smallest element we can viably patent in the patent office? And that's where we start. So now what we're talking about is a much slimmer patent, much quicker to do. £3,000 to £5,000 is your cost, and typically prosecuted in less than 12 months. So now you're in the patent box regime and you can halve your corporation tax. So that's the value in the scheme. And it is, I'm going to get on a soapbox soon, it really frustrates me that this isn't publicised better by HMRC, because they have the responsibility to publish it. So to publicise it, they're supposed to put 50% of their resources on policing and 50% on publication, and they're 100-0. So they're all about policing, they're not about publicising. So yeah, I'll stop now. But yes,
I'm sure
is a good thing.
I'm sure they'd argue that it's on their website, Mike. As with most things. So thank you for that.
Excellent. I'll take the last segment, shall I? So that's the easiest one. Give Mike a bit of chance to calm down off his soapbox there. So a big part of what businesses need in general, but especially when looking for funding, is a good support network. And that's a network of trusted advisors. And I've seen many of my clients get massive benefit and support out of the likes of trade associations, tech clusters, but other professional services, local enterprise, catapults, all of these things that are set there to help businesses. And I spend a lot of time working in these organisations, so I can help signpost my clients to the right one. So they're really good at providing specialist knowledge within their specialist areas. So again, I would advise clients or companies to go and look for that sort of specialist help. And the other thing that they give you is they'll introduce you to other companies, and that helps you then build that network of your own trusted advisors, those people who are like-minded that you can go and support and gain knowledge from. And on the funding side, a lot of them will have access to information about specialist funds that are available to your industry sector. So again, a really valuable source of knowledge. You can go to them and find out what's available for your niche, and then you can take that back into your business. And as Mike and Joe have both said, look at how that then fits in with your overall business plan and your goals and what you want to achieve, and how it works with your other resources and stuff that you're needing. So a support network is still vital in any part of business, but especially within funding. I think we've covered most of that now. So we'll go on to the next part. And in this last section, we're going to run through the top things we tell business owners to do before making any big decisions. And I think I'm handing over to Joe for this one to start with anyway.
You certainly are, so thank you. on your screen now is just a few of the things that as business owners, you know, directors, managers of companies, that you have to think about daily in your business as usual type routine. And there's obviously quite a lot there to be trying to juggle. So given the vast amount of things that are currently impacting on businesses, the key for me at the moment is, and what I would be I recommend to clients, is to plan. I've mentioned this previously, but really I know it is obvious, but generally it is the thing which most senior people in businesses and business owners stop doing first when under pressure. So my advice to everybody watching this is to set a couple of hours aside a week to look at where the business is at. How is the market doing? Where is it heading? Are you ready for these changes? What about your cash flow? How is this looking? You know, have you updated it for the changes that have been recently announced? Where does your revenue come from? Is it a main supplier? What would happen if that contract ended? You know, have you included costs that might be incurred in terms of dealing with making tax digital, you know, in your forecast and cash flow now and, you know, the next five years? What about the new social care levy? Have you included that? It's all these things to think about, you know, and unless time is put aside, obviously you don't get the time to do that. And for example, the social care levy, whilst it's only 1.25%, which seems a very small amount, it can potentially have a significant impact on businesses, especially as it's going to be paid by everyone, including those who are exempt from national insurance. So naturally, obviously you can't look at everything in a couple of hours. That's just impossible. But what you can do is start and have a rolling program. So maybe 1 week look at one area, the next another, and you'll be surprised just how quickly this planning can actually start to change things and give you more focus on the business and where it's going. And some simple changes can actually make a very big difference. And Mike, I think you know what I'm going to do next. Sort of thing. Would you like to add something on this one?
Would I like to add something? I'm struggling not to get back onto my soapbox.
I'll knock you off.
I guess the first thing would be just a little tip that we've seen recently. Companies typically wait right up until the deadline to file their statutory accounts in a company's house. And what we've seen recently is an odd quirk, and we can't get under the bonnet of this because we just can't get into the data because it's about credit rating agency. Obviously, they won't let you into their algorithms. But what we're seeing is if you're filing your accounts earlier, then your credit rating is improving for nothing other than the fact that you filed your accounts early. But what we're making an assumption here is that the credit rating algorithm is making an assumption that your business is under control because you're not being forced up against a deadline to do it. So that will be a free giveaway. There you go. Get your accounts on early because it will actually positively impact on your credit rating. So the bit about my soapbox, this is what I talk to business owners about all the time. Cash is king. Cash has always been king. But coming through the state of our nation over the last 18 months, the state of our planet over the last 18 months, cash has been an absolute nailed on focus, or should have been for every business. And it's not just about cash now, it's about now, next month, next quarter, even next year. You should be able to forecast out with a reasonable amount of certainty for the next quarter, and at least give you a decent indication for the next year. So businesses don't fail because they don't make a profit. They fail because they run out of cash. They can't pay their bills. That's why they fail. So cash has to be the main thing you look at. And really it's about understanding your entire value chain. So it's understanding where your cash drivers are in your business. So to give you an example, we had a few months back, I had a client absolutely delighted saying, just secured a £10 million contract that secures my business for the next 3 years. Isn't it fantastic? And yeah, it is great news. I had to then, over the next week, talk them down on the basis of, if you sign the contract, your business will fail within 9 months. Because the way the contract was written, the terms and conditions in the contract and their supply chain meant that they wouldn't ever be able to catch up with the cash flow. So what did we do? We identified the issue for a start, broke it to them nice and gently, but then helped them restructure with their customers and their supplier in order that they could actually manage the cash flow. And we can do that by a number of ways, that restructuring, bringing in finance to support in the process, whatever it happens to be. But the key is they could and should have looked at 3 years for that contract and understood their value chain and its impact on cash. And only when you do that holistically for your whole business can you say you've got a handle on cash. And if you haven't got a handle on cash, well, good luck.
Yeah, and I think that goes back as well to having the time, isn't it? The time to look at things, look at that bigger picture. So hence giving yourself that time, to actually look at the contract. If you're really busy and bogged down in the day to day, then you might miss that kind of detail. And in this case, the client might have signed that contract and been in a very different position to what he was in, where we were able to change it. So do take the time. I mean, for me, it's as important, as getting the product out to the clients, providing the service. It's making sure that we actually give ourselves that opportunity to see the bigger picture and to know where actually there might be pitfalls.
Excellent, thank you both. So we go on to the next slide. So Jo, this is sort of a bit of a recap for you here, I think.
It is indeed. Yeah. So what this shows is the four key things that if you're doing these, that your business should be ready to navigate the future and what changes are coming up. So having stressed the importance of planning, this is really just to summarize that whether you're coming out of a tough period and wanting to stabilize, or if you're looking to grow or even sell your business, doesn't matter what stage you're at in your business, even if you're a startup, these are the four things that you need to be looking at. So cash, as Mike said, reviewing your cash flow, reviewing your forecasts. What is it showing? Have you got that working capital in place that you need for the next quarter, year? What's the next 3 years, 5 years looking like? Performance, again, the financials, performance, and what actually.
Oh, Jo's frozen. You...
We almost got all the way through.
Well, they don't know until year end what actually was happening, whereas you need to be on top of it really and looking at it regularly. How secure are your revenue streams? Look at those contracts you've got, consider the worst case scenario. It's always, what is it they say, plan for the worst and hope for the best. And that planning is also critical in business. And then, as Mike mentioned earlier, understand the value in your business. Even if you're not looking to sell, but you need to know, where is the value? What is this business? What have I got? What do I need to look at? And where am I going? How do I get there? So if you understand and have all these four things, if you're thinking about them and giving yourself time to think about them and looking at them regularly, then you should be prepared for the unexpected and will recognize when changes are needed. As a business owner or senior manager, planning and reviewing should be part of your business as usual, in the same way as producing a product or supplying a services. It just needs to become part of the day to day. So, if you need any support, then speak to your accountant. They'd be happy to guide you on this. But say these are the key four things that if you take these away and just start thinking about them, you will You'll be surprised at just how a little bit of planning can make a bit of difference. And like Mike said, in terms of the accounts filing, that was quite interesting for us to notice over the last year how those clients that were filing accounts early were finding that their credit rating was improving, and those filing them later, either on near the deadline or even, you know, some although the deadline was extended, in that extension period, their credit rate was dropping slightly. So it's important to try and get things done as soon as possible, really, and keep up to date. Again, Mike, would you like to add anything as a final summary?
Yeah, thanks, Jo. Those of you looking at the slides may wonder what's going on in the bottom right-hand corner.
I didn't see that. So.
I told you I was going to put the frogs in there.
This is one of the things that I say often. It was given to me years and years and years ago, and I can't find the person to credit this to originally. It's the frogs on the lily pad. So 3 frogs on the lily pad. One decides to jump off. How many are left? And the answer is 3. Because even though one has made a decision, they've taken no action. And that's what I see time and time and time again in business. Identify a problem, work out what to do about it, decide to do something, and then don't follow through with the action. So the one takeaway for me today really is just that: action. Get yourselves into action, work out what you're going to do, work out a plan, execute on the plan, and then review, start again. So in that cycle, the key thing, don't be a frog. Jump off the lily pad, take action, start moving. Crikey, this soapbox is really getting in my way.
Excellent, thank you. So I realise this is a vast subject and we've only covered a really small part of it. And as you can see, I'm sure these guys could go on and on constantly about it, given half the chance, but I'm not going to let them because we are nearly out of time. Our aim from today really was to get you thinking about what is relevant to you and your business, and then decide how you can take that action and not be one of Mike's frogs. We are more than happy to discuss any of your requirements with you. And as Jo's said numerous times throughout when she's talking, is that your accountants can advise you. Now, I go out and see a lot of clients, and a lot of them aren't getting this advice. So if you're not getting the advice from your accountants, then please come and speak to us. You know, be it Jo, Mike, or one of the other people on the teams that we've got, we'll be more than happy to discuss it with you. But go away, have a think about what you need, what's relevant to your business, and then come back to us and we can help you put an action plan. To say that could be some first level advice, signposting you to another organisation that can help, bit of consultation, or actually structuring a solution for you. So thank you all for your time. I'm going to just check with Lorraine, see if there were any questions that she would that need answering. This is a bit that Jo hates. But yeah, if there were any that we can go over, that would be great.
We've had a couple come in. We've probably got about 5 minutes, really. An hour is a long time for someone to sit and listen, so thank you to the guys that are still here. One really interesting one, possibly for you, Sam, I'm not sure, we'll see. We've got somebody on the call that's saying that they think that they probably can claim R&D tax relief. Their year end is December 31st. Do they still have time to put a claim in if they've never done it before?
December 31st, yes. I have to admit, we have done one of these before on the last day of the month at 2 o'clock, and we did, for somebody who had a year end of that month. So yeah, I'm really happy to hear that it is December. So yes, they have still got time. And I think the best thing to do is to discuss about what their costs are, what they're doing, what part of it is eligible under HMRC's understanding of what R&D is, and then we can understand what that could mean as a value to the client, and then look at the best way for them to go about claiming that. So yeah, still time for December year end actually. And the other point, if they've been doing R&D before, the way the R&D scheme works is that you can go back 2 years. So this is obviously a December 21 year end. We've still got time to look at December 20 and December 19, if I've done my adding out right. Yeah.
And it's a really valuable source of cash, or it can be. I think our average claim value is 63,000 at the moment, I think, isn't it, with our clients? So, yeah, lots of opportunity there if you're already undertaking R&D activity. Another one for each of you, I think this is probably directed at. So, if you had to pick one thing tomorrow out of all the things that we've covered, one action to undertake when you log off this webinar, what would you advise a business owner do? Mike?
Okay, what would I say? I know it's an old cliche, but it's about taking time. And it's time to work on the business, not in the business. So you as business owners, managers, directors of businesses have choice and control about what you do with your time. So make a choice, exercise that control, book some time in your diary, 2-3 hours every week, and make it absolutely sacrosanct. Spend that time, talk to your business friends, so accountants, lawyers, other business owners, please, not your mate down the pub, unless they happen to be another business owner or an accountant or something. Talk to your business friends, and running a business is a lonely place. Take time to soak up all of that good advice that you can find if you talk to the right people. So take time, exercise your choice and control.
So,
Me, I would pinch one of Mike's things that he was saying earlier. Cash. I would review your cash and your forecast, so your cash flow forecasts, just to make sure they're up to date and you know what you've got, and that you've accounted for everything. And then if there is, any gaps or issues there, then we can you can start to address those. So cash would be the key for me to focus on.
yeah, anything else to add, Sam?
So you two have done the best too. Thank you. I think I will. Going back to the last slide of Joe's, I think one of the things that resonates with me is I went to see a client, or I saw a client over Teams, and they were telling me about how they changed their business, and what they had done is they'd done a strength and weaknesses review of their business. So where they was in manufacturing and they have a really good product, their strength was actually their supply chain. So they were then now reviewing what do they do differently, how can they take the benefit of that supply chain and maybe sell different services or different products through that. So I would do a strength and weaknesses review as one of my things.
Great. Okay. We've probably got time for a quick response to this one. Mike, you may be best placed to pick this one up. Got someone on the call looking for some funding advice. So I know we covered the options earlier in the webinar. If you are starting from an idea, so it's not an established product, service, business, where do you go first to navigate this world of funding options? I know when I started MPA about a year ago and tried to bring my knowledge up to speed on this landscape, it just, the more you Google it, the more complicated it gets. So what type of professional service partners, people do you go to for advice if you've got a great idea?
It was a great question. One of the difficulties you'll find is, like on Dragon's Den, I've got a really, really good idea, and I'm valuing my idea at £1 million. Would you give me £100,000 for 10%? £100,000 for 10% of an idea is quite steep, which is why you see most of them getting beaten down. So I wouldn't suggest that was perhaps the right route to start with until your product is a higher technology readiness level, to use a manufacturing term. I would say a mixture of grants and friends and family investment. So there's a very generous seed investment scheme that pretty much protects the value that anybody's putting into your business in case it fails. So I think it's 85 or 90% of the money they would get back if your business failed. It's a very, very discreet scheme. But yeah, friends and family together with a grant, and then British Business Bank is a great place to start as well. They're quite happy to loan companies money based on the number of directors that they've got. Bizarrely, why that's a good indicator of a company, I don't know, but that's what they've chosen. So there's a loan scheme there. So a combination of loan, bit of your own money, friends and family, and a grant. I think that would be, you could pick up 150,000 pounds with that nest of products.
Wow, okay. We do have a blog actually on our news and insights section at mpa.co.uk about some of these funding options that Mike just mentioned, and we do have quite a comprehensive frequently asked questions section specifically around smart grants that are funded through Innovate UK. So they have a few different grant options, some of which are in response to the grand challenges, some of which are open, lots of options. So have a look at the website. Loads of stuff on there. If you don't find what you're looking for, let me know. I lead the content team here at MPA, so if there's anything you want us to write about, do webinars on, let me know. We're bang on the hour, so I'm going to close now. You'll get the video to this session in an email from me in the next couple of days, and there'll be a survey that pops up on your screen once I close it, so take a bit of time to fill in that. That'd be really helpful. Yeah, thank you to Mike and Joe and Sam, and thank you to all of you for attending today. I think that closes the session.
Thank you.
Excellent. Thank you. Thank you, Lorraine.
Thank you.
Bye.